Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Ceresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for January 26, 2009. This is your host, Patrick Ceresna. First off, I want to take a look at the S&P 500 using the SPDR Exchange Traded Fund symbol SPY. And the first thing I just want to bring to our attention, we were talking about the rising wedge formation that's been forming over the last couple of months, and we were looking for the resolution to occur on the downside, which we got over the last couple of weeks. And really the one thing that we've been talking about is how we needed a break below that 84-85 focal point on the downside to really open the window for much stronger selling. And even though we've been really range bound in this 80 to 83 zone on the downside, I would not be looking for this to have a bullish resolution, even though even a 1 or 2 day rally may in fact take it back above the 85 zone. It's improbable that we're going to start a new rally of any significance off of this level here. So really, wherever the buyers end up exhausting themselves, we do expect this to have another sell cycle, most likely coming down at minimum to retest that 75 to 77 zone on the downside. That's when we're going to be looking at the scenario as to whether or not we're going to see a double bottom in the markets, or whether we have a break to the lower end. Any break below that 75 zone on the downside opens the window for a move all the way down to the 65 level, even down to the 60 in some other scenarios. So really what we want to observe this week is this 80 level on the downside. Any significant break below that is immediately putting into play that testing of those lower zones. I want to take a look at the ISE US Regional Banks Index, which is the symbol JLO. And over the last month or so, we've been talking about the predominant weakness in this sector. And we were saying any break of the 17.5 to 18.5 area really opens the window for accelerated selling. And we were talking about that measured move being down in that $12 to $14 area. We've now completed that leg down. So at this stage, the people that were taking positions on the initial breakdown, this is a good area to be taking profits in that cycle. So we really are getting that completed measure move, but we're already seeing a few days of consolidation here. So we're going to now make this a new $13 to $14 focal point on the downside. We still have the potential, especially if this bear market isn't over in the S&P 500 and so on, for another big leg down in this index. If this little formation here ends up being a little flagging formation, then in fact still a measured move can go all the way down to the $7 to $9 area on the downside for these regional banks. Next, I want to take a look at the ISE Syndex Index, which is the symbol SIN, and this is an index of the casino, tobacco, and distiller companies. More or less, when we broke that rising wedge formation, we've now seen selling come all the way right down to that 60-62 focal point on the downside, and we've been now stuck in this range between the 60 to 67 on the upside. At this stage, if there's absolutely no conviction on the upside here from the bulls over the next few days, it's very likely we're going to see again a break of that 60 level on the downside, opening the window for retesting those previous lows. So let's continue to watch this, but if really what we want to see is some follow through, any bullish follow through on the upside, we would really need to see breaking above those $70 level to prove that there's some sort of conviction that's not going to be aggressively sold here. When we take a look at the ISE Home Builders Index, which is the symbol RUF, more or less this continues to be a little bit range bound. It's selling with the markets, but not with the same degree of conviction that we're seeing in some other sectors. So really at this stage, one of the things that I'm thinking here in terms of a scenarios is that we probably may have already seen the bottom in the home builders down at that $4.50 to $5 area. So if we do have another wave of selling in the market, we may still come down and retest that zone on the downside, especially if that 6 to 25 area is broken on the downside, right in that red zone. If that's broken, we could see another little drop in here, but definitely the selling is not as intense in the home builders as we're seeing in other sectors. Next, we're going to look at the ISE Natural Gas Index, which is the symbol FUM. And this index here, we just tightened up the lower focal point to the 62-65 range by a few dollars, because what we're seeing here is a basing pattern right around that $65 level on the downside. And really at this stage, natural gas, like we're seeing in crude oil and a few other places, this sector really seems to be starting to base. And not that makes it particularly that bullish, but the selling really has given some sort of sign that it's now coming to an end in these sectors. Really at this stage, we can't rule out the possibility of one more leg push down to the $50 area on the downside if the selling comes more intensely here, but we certainly are not ruling out the possibility that we are seeing the bottoms coming in here in this area right here. Finally, when we look at the ISE Mini FTSE 100 Index, which is the symbol UKX, we have seen the break of that 420 to 430 area on the downside, which brought in a good solid 5 days of selling. At this stage, we're seeing an area here where there's a potential for a multi-day rally, but it's unlikely that it will be of any substance. We really at this stage are thinking that we're going to see down that 375, 385 area on the downside for a resolution to this move. But again, on the short term, we can't rule out a little bit of a snapback back up to that 420, 430 area. Thank you for joining me for the ISE Equity Index Outlook.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.